Hello, this is the Tradesight U.S. Stocks and Futures Market Preview and Forex too, because we combine everything now for Tuesday the 10th of November 2020. I will tell you there's nothing really to report on Forex. It was a dead flat session, so we didn't get anywhere, and our Forex calls didn't make us any money. So that's fine. I mean, that happens when it's a dead session. But we will continue to look at futures and stocks, and we'll do all this again in one report. So there's nothing to review on the Forex side that was changed from what we said yesterday. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form. You can see there was, we was a move up and we swept the highs. When you see the other version, the S&P, you'll see the gap. And it was a big gap up, and it was two things, obviously. The Biden win declared over the weekend. We already knew that. Market's been rallying since the election night last Tuesday when it became clear to anybody that knew how to do math that he was going to win. And, obviously that's a good thing. Having said that, the other news this morning was that Pfizer believes that they have a vaccine that's 90% effective, 90+% effective, and it's in stage 3. That's good news, obviously. And, in most cases, I would tell you that, if that was something that was going to immediately be deployable, we could get to work and the market would probably rock from here. Having said that, it's going to be February, March, or April before a lot of this, if this vaccine is finally approved, it's going to take that much time to make enough that it's going to matter on the planet. And the biggest problem, I think, facing the market right now, and we've said this for a while, and we've seen it in some of the options numbers. I've been privy to some options numbers I haven't yet shared with you guys, but I will soon enough. But at the end of the day, what it really comes down to is this. The market is way more worried about COVID than anything else. It knows what's coming. I think we're going to have a very, very horrible holiday season, especially after Thanksgiving, when it comes to the COVID numbers. And that's going to do some damage to the economy. And if we're not ready to pick that up, or if we have to wait until, let's say, January 20th to try to clean that up, it's going to cause some problems for the markets and the economy in general. So hopefully we can get another stimulus package passed that helps out the cities and the states that are already struggling financially, so that we don't have to lay off the firemen and the firewomen who work for us and have the hospitals hurting and the schools hurting. And, it just needs to be done. That's what we should do as Americans. And if we do that, then that would be great to help bridge the gap and move the market forward. If we don't do that, all we ever really did was print a bunch of money, some of which ended up in the hands of people who might need it, and a lot of it did not. It ended up in the stock market, and that's it. So we'll talk about a couple things today differently when we look at the stocks than we usually do. I'll give you some examples. But again, here's my general concern, is that I think that everything else being equal, the market has concerns about what the next couple of months bring, and the vaccine sounds like a great announcement, but I think it could mean that there's still some problems ahead, and we'll see how that plays out and what the solutions are offered by the feds and the government. So here's the ES front month futures contract. Again, you can see the sweep to the highs. All right, let's go through the major daily charts from here. Crude oil up. It was up today. It's down right now in the aftermarket, but it was up a little bit today, as you can see. Gold up for 1980. That's again now. Today was down. I'm sorry, I'm quoting tonight's. That's my bad. It's tonight's quote. Now, let's look at the S&P cash index. The S&P cash up 41 points. If you look at the cash side, what you see is the big gap up. Tried to go higher even and came lower. Closed under the opening level. So we did close lower than we opened, but we were up, for the session. And a lot of people, that watch the major news networks. And again, professional traders don't ever look at the Dow Jones Industrial Average. It's 30 stocks. It's a waste of time. However, it's going to be the thing that people see. So the S&P was up 41 and the Dow was up 834. Okay, that sounds really amazing, but let's dig into some of the real other math that matters here. The Nasdaq 100 down 260 points. It opened up, but look at that engulfing candle. That's horrible, right? A big down day. And again, I think reality is going to set in for this market about COVID, and we're gonna see what that means. SOX had a big topping day, down 31 after being up. Biotech's also down 31, never got to new highs. Russell 2000 up 60.87, new breakout. Now that's interesting. The small cap index, which suffered all year, is finally breaking out to new highs right now. Good, strong day for small stocks. I think the investment in the future of this country is going to come. I still think that that there's just issues, obviously, getting the economy off the ground here. The VIX up 89 cents to 25.75. The trend closes at 0.73. Now, we talked about this last night. I said there's going to be a 3. If you look go 10 days back, because the blue line is the 10-day moving average. you go 10 days back, there's some pretty big numbers that are going to drop off that moving average. And if they're replaced by low numbers, which today was a 0.73 number, that 10-day moving average is going to drop. And here's the thing. It's now at 0.88, and there's still two more big numbers to drop off. If we get some more low readings, it's going to get under 0.85. Has not done that for quite a while, in fact, right? And so that would be a sell signal on the market. When the 10-day moving average of the trend gets under 0.85, that is a sell signal on the market, at least short term. It's not a big deal long term. Nasdaq volume, this is the other thing that was interesting. A big sell-off day, gap up, closed lower than we opened, and yet record volume. Look at this, 5.8 billion shares. This is not an options expiration day. It's nothing like that. It is just a pure trading day, and it is massive volume. Advanced decline ratio on the Nasdaq, legally. Now, this is the fun part. 1,135 positive, so way more stocks up than down, even though the Nasdaq closed down 260. Again, it's some of the big COVID stocks are down today, and they're down a lot, by the way. But everything else was still up. The advanced decline ratio on the New York plus 1707, one of the best, most breadth in the market, meaning more stocks up on the New York Stock Exchange than down by almost, it's in the top 10, 15% of the year dates-wise. So that was very positive. All right, let's go through a couple of these things, and then I want to make a point of what really went on today. So Google did gain, it made new highs, but it closed only up $1.69. It's up a little bit. Apple down $2.37. Now we start talking about the COVID stocks, right? Stocks that benefited from COVID. This is what's interesting. Netflix down 44.23. It's still stuck in the range from the last 5 months, but definitely doesn't look pretty. You cracked that 450 level, and there's trouble on Netflix. And again, they raised their prices over the weekend a couple bucks on people, so we'll see what that means. But that's one. Amazon, another one, down 167.63. What, people are going to stop ordering from Amazon? What does that mean exactly? It means something, obviously, and we'll talk about it probably this weekend. I don't think we need to talk about it today. Tesla down $8.69. Okay, whatever. Tesla's still hanging near all-time highs. Facebook down 14.64. Again, a stock that benefits from COVID. There's a lot of talk of people trying to hop off of Facebook for a variety of dumb reasons, but I don't know if that'll ever really matter to Facebook. It's got a pretty big user group, and it is what it is. But for today, as a COVID stock, it was down. Goldman Sachs, a bank, we follow this one. Remember, this has been stuck in range for 6 months, and it's still technically in that range, but it's up 13.67. TLT, the 20-year bond ETF, down $3.35. So the bonds are actually dropping on this news. And again, we don't usually care about the Dow, but I will show you the Dow up 834 points. But again, a topping sign on volume there on the Dow. So again, I think the issue here remains there are things ahead for the market to be worried about. COVID in particular. You got to assume that it's not the election or anything left in the election. Now, I just want to give you a quick example of what I'm talking about, and I think this will make the point and drive the point home. Everybody who's been working on conferences over their phone or computer for the last many months, if you didn't already do this prior to COVID, Zoom, right? Zoom is a stock that has benefited immensely. Stock ran from $60 to $600 over the course of 9 months, 7 months, because everybody was using Zoom from home to do their meetings. I continue to think they'll continue to do that. I think a lot of businesses are going to figure out that that's a smarter way to do business. Having said that, that doesn't change the fact that the stock was down, almost 80 some points today on the news of the vaccine, right? So the vaccine's out. Suddenly, we're not going to work from home anymore. I don't know if that's how it's going to go, but that was sort of the gut reaction. And then let me give you one in the other direction. Carnival Cruise Lines, which obviously came close to bankruptcy and has been suffering, up 5 points, $14 stock up 5 points in 1925 on the news of the vaccine, meaning, oh, look, if we can get a vaccine rolled out and get this thing over with in 3 or 4 or 5 or 6 months, maybe, and I don't know how that'll play out for sure, then suddenly people are going to want to go on cruises again, which I can tell you I'm not sure I will, but that is it. So there's a rotation through a gap out of the stocks that were COVID stocks and right away because of this vaccine news, and into some of the stocks that had suffered from the abnormal economy, right? And now maybe they're going to get, oh, okay, maybe this is okay. I don't know that that's going to hold because, as I said, nothing about this vaccine is going to solve a problem between now and February, March, or April. And in fact, it's probably going to get a lot worse, and the death rate's going to get a lot higher ultimately. And there could be impacts to the economy based on that. So I think the market's got some reality from that perspective. We'll see what the government does to try to handle it and get control of it and help people out. And if they do it right, then I think, bright future ahead. And then we got to figure out how to pay off all this debt. If they don't, then, who knows. But right now, COVID is the thing to watch out for. And I think if the market's going to come in and go head lower, that'll be the headlines and the reason. That's it. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Tuesday.